going to leave it there. But it did make me think about not virtual rocks, but it made me think about physical rocks, because gold has actually had, I just insulted every
look at you. Look at you. I just like the turn there too.
Yeah. It made me think about physical rocks, and gold's up like 8.5%, 9% on the year from the lows in November. It's up 20%. It's peaking towards all-time highs. I want to get your thoughts on gold. Do you think it's something that should be a strategic allocation in a portfolio? Is it a tactical allocation? Is it actually an inflation hedge? Give me your hottest, spiciest takes.
So many things on there. One, just to give context too, what do you say year to date? It's about 8.5. Is that right?
I think I was using the GLD ETF.
I'm looking at the future. I'm looking at the futures. I think it's up 8.5. And speaking of, we're back. Bitcoin year to date, it's up like 68%, and Ethereum like 50% on at least the future side. So I've said it before, like, I don't understand what gold is. I've been trying to think about this for like, I don't know, 2 decades. I'm not so certain. Historically, like we've talked about before, it is a hedge, right? But not in the years that you want it to be a hedge, or the quarters or months that you need it to be a hedge. And as you've talked about liquidity cascades, like a March 2020, everybody throws out the baby with the bathwater. Everybody's just trying to raise cash. So they're even selling their gold positions there. You know, historically, people have talked about, you know, the suit of armor versus a bespoke suit today, but it doesn't necessarily cover you in those intervening years. Is it a form of inflation hedge? Sure. Is there higher betas to inflation with commodities? Possibly. I'm not so certain, but I still think it needs to be part of our portfolio. Trying to think of what I could say publicly. We have it in our cockroach portfolio because we view it as like a fiat hedge of like, what if, you know, markets shut down like they did after 9/11, right? Like, you want some gold. Not only do we use gold futures, we use physical gold as well. And man, it is comforting to have that physical gold when SVB was going on. I'll just put it that way. But then the question is, like, what are you going to do with those kilo bars of gold? Right? Are you going to shave them off? No. Like we've talked about before, it's like you're just, you know, you're hoarding supplies for, you know, the latest, you know, Blackwater ban that's moving through your neighborhood. So I'm not sure, like, if it seems to be a long-term inflation hedge. It seems to be a long-term purchase power parity hedge, but it doesn't seem to be those things when you want it most, which makes people rip their hair out and say it's stupid or it's never going to work, or, you know, the hate on gold is like right up there with crypto.
I find gold to be fascinating. There's sort of 2 things I'll bring up here. The first is, from a historical context, I wonder how much of our continued belief in gold is just long-term cultural memory. Right? Gold, when you think about the way currency was created thousands of years ago, gold was sort of the perfect metal to work with, right? It's scarce enough that people can't just go easily dig it up. It's malleable that it can be made into currency, but not so malleable like silver that it's too soft and breaks easily. It doesn't have a ton of industrial uses, so it could be primarily put towards being a currency. And then look, if you're a government that sort of de facto institutes gold coins as a tax, gold becomes money, right? In my view, the thing that is money is the thing that your government taxes you in. That's ultimately what you have to earn to make sure that you pay your taxes. And so there you go. We get money, and gold sort of fits perfectly in this triangle of things we need. That's why it's not palladium. That's why it's not silver or other precious metals. That's why it's not steel. That has since changed over time, but our cultural memory goes back thousands of years. It's not a super stable store of value, but if you are not a U.S. citizen, and you go to a different point in time in history, and you're talking about being able to physically transfer some sort of value. Like, does it really matter if gold goes up or down 20% as long as you can get some of your net worth out of a country if you're fleeing or avoiding local hyperinflation? Like, as long as it's accepted worldwide, I could see it having value. It reminds me of a story a friend of mine told me who was in the special forces, and he said one of the things he was taught was that when you go out in service, having a Rolex watch is sort of the equivalent of being able to get a low-end car anywhere in the world. Like, if you need to escape, that Rolex watch on your wrist will get you a vehicle. And I sort of think of gold the same way. Like, there's no cash flow. There's no reason it should necessarily go up. I can't make a strong argument why it's tied to real rates other than people think it should be, right? But it seems to at least have some modest store of value for folks in the short run, especially if you consider a considerable amount of local volatility. If the US dollar suddenly exhibited hyperinflation, gold might be a tremendous store of value. I don't know.
Well, I love how carefully you're choosing your words, which is great. By the way, in the comments, Sean said, "Gold is money; everything else is credit." You know that the Austrian perspective, but at the same time, like I was watching this thing at Steve Keen the other day too. That's talking about like all we are is like exchanging bank liabilities. I thought that was another good way to put it. But the whole point of gold, what we're always talking about is like it's nobody else's liability. And thankfully, well, it passed so quickly. I don't think it actually worked. But the idea with with SVB and some regional bank collapses is we found out that deposits are banks' liabilities, and that's what people. This is why people are gold bugs. So they like gold is they don't like it being anybody else's liability. Granted, you have other issues with storage facilities, vaults. Like how are you going to keep it? Security is now your liability, not necessarily it being on a balance sheet of
But
a
it
bank.
presumes there's a buyer, right? The whole thing
Yeah,
with gold
yeah.
is it presumes there's an eventual buyer on the other side. I know gold people and Bitcoin people don't always get along, but I think that's fundamentally what people argue with Bitcoin, which is, look, we've got this whole proof of work network that is doing all this work, and so long as we within the network all accept the Bitcoin from each other, then for our services and goods, then the Bitcoin has value. We've circumvented the global monetary system. Now, the question is, how big can you grow that network? You need everyone to accept it. I think most people on Earth will accept gold as a form of payment for service and goods to a certain degree. And so, in that sense, it is a sort of global money of sort of the last resort, right? I don't know if you could really go anywhere on Earth and not convince someone to take at least gold as payment in some form.
Right, but it's currency. But would you call it cultural memory? Is that what you called it?
Yeah.
But also, like, I mean, I'm sure that's going to permeate the rest of our conversation, but value is in the eye of the beholder, right? And we do have a long cultural memory. So it does have those thousands of years of Lindy effects. And to your point, like, historically across the globe, it's used as, as a medium of exchange, but like, that's that cultural memory. And it's everything that we do that has value has cultural memory to it, right? Even our modern laws are a cultural memory from, the beginnings of Christianity. So like, we could kind of say that about anything. Like it's all cultural memory and a sustained global belief or disbelief in that this thing has value. And that's the point. Is like it's interesting though that the dislocative effects when gold has high value is it cannot be cataclysmically dislocative, right? Otherwise, we're talking like guns and butter time, right? It needs to be like mildly dislocative, like any sort of like diaspora or like intermittent market shutdowns. But if things get worse than that, I'm not sure gold has that value. Besides, you want protein and a water source,
Right. I often hear the argument gold is an inflation hedge. I think those who, first of all, we've been on this tirade before. What is inflation? What type of inflation? I'm not going down that path again. I think there are plenty of people who bought gold. Massive truck just went by. Plenty of people who bought gold in 2020 expecting inflation that then did not get the hedge they wanted. But there was this paper that came out a couple of years ago. I think it was August 2020 is when it came out. That was written by Claude Erb, Cam Harvey, and Tadas Visconta, called Gold, the Golden Constant, COVID, Massive Passives, and Deja Vu. Very long title. The idea of massive passives came about in the post-commodity boom era, when Goldman wrapped up commodities in an index. Suddenly, tons of endowments started investing in commodities. That flow of capital changed the very nature of commodity returns themselves, became more correlated with equities. There's volatility spillover effects. Commodities within that basket became more correlated to each other than commodities that weren't included. And so this idea of like massive passives, when you get too much flow into a large passive index, can change the nature of what you're actually trading. What this paper argued is that the same thing has happened with gold, that by taking gold and putting it in financial products like ETFs, like futures, it is now no longer tied to real interest rates the way it seemingly was in the past, they showed a ton of the returns are basically driven by supply and demand in the large ETF structure. That is, money flows into the ETFs and money flows out of the ETFs. That is now the primary driver of returns for gold in the short term. It's just all supply and demand flow. And again, without any cash flow coming from gold, other than like there's the storage costs of gold, that's sort of your negative carry. I'm not sure why it would necessarily be attached to economic fundamentals anyway. And I'm sure I don't think any gold bugs actually listen to this show, but I'm sure if they did, they'd tell me again why I'm a complete idiot and way outside my realm of expertise. But gold is one that I've always struggled with my whole career.